Alrighty, good morning, everybody. It is Friday, June 17th, 2022, and we'll go ahead and get started here. I want to go back and take a look at what happened here yesterday. And let me just play with my audio here. It doesn't, that should be good. Okay. So let's go back. I just want to show you what we did yesterday here, and then we'll get into today. So yesterday, as the market started selling off, I told you guys the most aggressive thing you could do was to get short off the FMA and then ride it down to 85, maybe into 81 and beyond. And so I went in, put two contracts on. It did go, if you took the FMA, it did go just a tick above 2 points against you and then went in the direction. So had you kept a tight stop there, you might have been stopped on this little peak above the level. But I just added there and then took it down. And as you can see, we came right into 85, our minor eye level, bounced out, and then I told you you could try the FMA once again, and that led to another 6 point push right back to 85. And then we kind of got stuck in some sideways chop. Now, when the market came back up and started to break through the 200, that's where I don't think I called this trade, but that's where I gave this a shot here off of 96 or 95.50. And again, it only went about 5, 6, 7 points in my favor and then turned around and came back down and was fairly sideways here. Still basically holding right in that box there from 81 to 85, sometimes hitting 85 to the tick on multiple occasions. And that was basically our morning. I gave that short there, this short here, and then that was it. I tried this long, didn't get to my ultimate target, which was a little bit higher up. And then you can see, let's just take a look at what happened for the rest of the day here. Still trying to defend this area around 80, 81, and sold off, and then came up, held it again, but then held the 200 to come back up. It was very, very sideways. Lots of tests of 81, lots of tests of 85 here. And let's see what happened. Continued going, and then we failed. So it looked like we were potentially going to be going to break down to 25 and 12, but turned around and came right back up. So a very balanced end of the day there. And then coming into the Globex yesterday afternoon, it looks like we're attempting to come back up and break through to the upside of 81 and 85 here. As you can see, once again in the overnight session, broke through, pulled back, held 85, tempted to break out, and of course they make it messy and came back and held just about 81 throughout the overnight session. And that's where it brings us coming into the open here. They tried to bring it higher and then failed, and now we're back lower, right back into the range of yesterday, all the chop. And that's where we find ourselves right now. Notice where we just bounced right off of this swing from yesterday. We came right into it there and got a reaction off of that. And so we're just going to have to see here. It's going to be another fairly slow, sideways, choppy session within yesterday's price range, or are we going to get a breakout to the upside or a breakdown to the downside? We do have Powell speaking right now. He'll be speaking for, I'm not even sure for how long, but he did start at about, what, a half hour ago. So we'll see. The market could be fairly slow until something's said and we get some reaction. But let's go ahead and jump up to our higher time frames. We'll bring in our daily chart. And the daily, once again, we've been talking about these bullish divergences off the lows. So a couple of days ago, we talked about the bullish divergence off on the candle from June 13th. There was an attempt to break out, but then they failed right at the 50% of that day before. Came down and then got another bullish divergence off of the low of the 14th. And from the 14th, you can see they attempted to break out and got through the high of the day before. But then again, the bears squashed it back down. And then as of yesterday, we've got another bullish divergence off that low, which so far, if we go back to a shorter time frame, has led once again to a bounce. But just like yesterday, I told you that bounce from the low of the overnight session, for all we know, could be it, even though there's a confluence of bullish signals from the day before. So if we look at the chart here and go back to yesterday, we were talking about the bullish divergence from the day or two earlier. And it only led to a little bounce. And I told you I was very skeptical of any type of breakout. Sure enough, we sold off again. But as we come down, we get another clear confluence of bullish signals. So again, this bounce from yesterday's low to our overnight high might be all that yields because of how heavy the market is. And remember, with a strong trend in one direction, you are going to get those counter signals that lead to just little small shallow bounces and then it turns and goes for the continuation in the opposite direction. So not too surprising if that happens here this morning, especially because we do have a bearish divergence from the overnight high on the 60-minute and on the 4-hour chart. So two very, very important intraday time frames giving us a very bearish clue from the overnight high. So the battle here this morning is going to be between the low of yesterday to see if the bulls can hold it and go ahead and push higher, or are the bears going to win out once again, just like yesterday and the day before, and hold the market down and push to lower lows. Obviously, the opposite, or one of the other possibilities, is we just chop around within that range or within the low of yesterday and the high of yesterday. So going back to that daily, nice bullish signal that could potentially lead to a bounce, but again, we're very skeptical of that type of situation. And then let me go down. I don't think the 4-hour really has much else to add. It's just showing that nice clear bearish signal from our overnight high. I went ahead and put in the retracement levels of the smaller leg here. So there's a leg from yesterday's high, or just above yesterday's high, down to the low of the overnight session. We've got the 38, 50, and 61 on there. And as you can see, right where we have the 4-hour and hourly bearish signal is right where the market is failing, just 2 points in front of the 38. So let's get into the 60-minute. We'll start listing all the levels we're going to be dealing with here. And there we go. So here's that leg I was talking about from the push of, I guess it wasn't yesterday's high, the day before it. There's a little peek through right up to here at 38.43. So from 43 down to the yesterday's low at 42. We've got the 38 retrace at 37.1875, the 50% at 37.4250, and then the 61.8 at 37.66 quarter. Okay. There is, to me, looks like a pretty prominent swing right there that I think would be relevant here. That low is 23.50. So from about 23.50 to that 18.75, we've got a nice little pocket there that would make sense. But notice we're failing just right in front of it, and we got a double top formation with lots of bearish signals. So that might be it. But just be aware of that little pocket there. And then if the bulls end up breaking through that, getting through the overnight high, through the 38, and through this major swing, this was after, I believe, that news a couple days ago. We have the minor level at 35. We got the 50%, and then it's right up into the 61.8 and 37.70 again. I also do believe that these purple lines I put on the chart yesterday very well could continue to be relevant coming into the end of today. So I'm going to go ahead and throw this up and carry it out just so we're aware of that level. If you look back to all the chop from the last 2 or 3 days, these two purple levels are very, very relevant. Lots of reactions off those levels. So I want to be aware of that coming into the open here. So we'll extend this out. And remember, the levels were 37.63 and 37.97 if I recall correctly. Somewhere right around there. This one I believe is 37.97.75. Okay, so what else do we have here? Outside of those two levels, outside of the major 37.70, we have our minor level at 37.81, 38.12, and then it's going to be back to test the highs of the week. Let me just make sure. Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, pretty much we're going to be testing the highs of the week here if we end up breaking through the major level at 22. All right, so that's what the scenario is to the upside. Of course, there are other things. If you continue to carry through, we have the major area around 3,900 that I've been emphasizing for a while there, shaded in. We do have the swing here around 38.75, which is also our minor eye level. And we also have the pocket up here around 39.40 to 39.50 that I do believe is still fairly relevant coming into this new contract. So let's look at the other side of things. If the market ends up selling off and we break through the low of yesterday, well, first of all, we could come down and peek through it and fake people out for it to turn around and get some type of major bounce. That's always a possibility. But once we appreciably break that low, we've now broken a bunch of those intermediate to higher time frame bullish signals, and then we're down to 36.25, 36.12.50, 35.87, which notice is the exact 27 extension of this leg we're in right now. And then it's down into 34.89.50, 34.65, and 34.07. Okay, so that's what we're dealing with above us. That's what we're dealing with below us. And then let's look at the actual overnight leg here, or at least the leg from yesterday's low up to the high of the overnight session. So we'll look at the 10-minute here and just see what we're pulling back into here in this little pocket. So we've got, first of all, the 38 and 50% retracement here. It looks like we already bounced right off the 50% and came up for, I don't know, maybe a 5 or 6 point bounce before it came back down a little bit lower to peak through that 50% level. So the 38 and the 50 of this leg are basically done with. And then there's this little pocket I went ahead and highlighted here from, let's get the numbers, 36.69 quarter to 36.68.50, just basically a little 1 point range right there. Potential for there to be some buyers if the market comes into there. And then from there, we're right to our minor eye level at 36.63. And outside of these two levels, there's really not much else I'm seeing down here that would make sense for support. We did get some pretty strong reactions right around this 36.49 level. So maybe there'll be more buyers there when we get to that part of the chart, but really not much else there that lights my fire. And remember, being that we are very, very bearish, I don't know if I want to be buying as this comes down. I would rather be short, being below VWAP here, potentially below our short and fast moving average on the 512 tick chart. I would rather be a seller here to just take profit at these levels and hold for lower. So that's where we are this morning. We've got a couple minutes before the open. So for anyone watching on YouTube, have a great trading morning, a great weekend. And remember that Monday, the market is essentially closed. We definitely won't be here, and most of the big boys probably won't be either. I believe the market will be trading through Globex, Sunday's Globex into Monday, and then the market will close a little bit earlier than normal. So probably not the best market conditions to be trading in. So have a great weekend, a great extended weekend, and we will see you on Tuesday of next week.